Good morning, everyone. I'm starting a little bit late here this morning, so I apologize. We went late last night on the Halloween festivities, so happy November the 1st to everyone. And what we're going to do is we're going to do a quick run through the pre-market activity. There's not much in terms of headline news this morning, so good morning, RL, Low. RL, where are you from? I was thinking about it. This is really just a last minute thing about taking Friday off, but I figured, what the heck? I'm awake looking at charts, so I figured, why not? So I really didn't do a lot of preparation for this morning. I did a scroll through headline news, not much happening out there. And I think we'll kick it off today just with the dollar, because I'm really curious about the gold trade and whether or not we're seeing a real serious move higher here. What part of Florida, RL? I probably asked you this before. I'm so bad with my memory nowadays. And plus, there's so many people to try to keep track of. Yeah, our jobs in ISM today. Yep, yep. Okay, right. I asked you that before too, didn't I? Telling you, the mind this early in the morning does not work all that well. All right. So let's kick things off with the dollar. We're basing here a bit, so I'm not going to be the least bit surprised to see a rally higher. But as I mentioned last night on uh, Thursday night stock charts live, the weekly chart of the dollar is not looking wonderful. Stokes are weakening, and there's a good chance we close out the week with definitely the fast line down below the 50 level. Next week, probably the slow line will join in, and then we enact the phrase rallies tend to fade. So I would not be buying a rally in the dollar for probably the next several weeks. So I would trade counter to a dollar rally. So that means I would buy gold on weakness, silver on weakness, the miners on weakness, in an expectation that we close out the week fairly strong. So the dollar is down slightly this morning, but off the lows. And this is a 4-hour chart. These will all be 4-hour charts unless I say otherwise. Um, let's go to gold. Now, gold, this is an outstanding chart here because we closed out the day here up at the third standard deviation Bollinger Band. Overnight, consolidated sideways, good stuff. This is exactly what you want to see if you're bullish on a stock or commodity that is leaning into the third standard deviation Bollinger Band. Ideally, you get a trade sideways, a consolidation, an alleviation of the overbought condition, and then a continuation move higher, which appears as though we're setting up for right now. When would I grow concerned about the health of the rally? Right here. If we begin to break down below support here, I don't think it's going to happen today anyway. And I would get uber bullish on a rally up and through this upper band of resistance. So gold is looking good this morning. As to silver, silver good, not as good. Looks like we have these Bollingers, which are beginning to tighten up here on a 4-hour basis. That's good stuff. You can see we have an upper band of resistance here, which we've been flirting with, and we're getting rejected at. So expect that to continue in the short term anyway. But net, it's a good chart. We're putting in higher lows. I'll say higher highs once we clear this upper band of prior resistance at the 18.36 level on the silver futures. Let's check out the 10-year yield. Because again, bond not yields, the 10-year Treasury bond price. And we are up this morning yet again. And another instance where we closed out the day yesterday above the third standard deviation Bollinger Band. We didn't pull back. We traded sideways. This is very, very bullish stuff. This is a continuation breakout setup. And this bodes well for precious metals, and it is somewhat bearish for the US dollar. Now, taking a look at the stock market futures, let's begin with the NASDAQ. Yeah, we're rebounding here. I didn't expect a huge sell-off here. You know, obviously this is just a pre-market action. You know, what happens after economic data? What happens after the first hour of trade? You know, who knows? But the implication here is that we will probably open up higher. And we're looking for a breakout here above this resistance level. And in all probability, we're going to proceed to new higher highs here this month, probably today. Let's go to the Russell 2000. All right, so here's our upper band of resistance. We're flirting with a breakout here. So I went over this last night on Thursday Night Stock Market Futures Live. I believe it's IWY. Let's bring that up here really quick. All right, so here's the IWY. The Russell 200, which is outperforming the Russell 2000. The VONG, which is the Russell 1000, and it's been outperforming the Russell 2000, because here's the Russell 2000. And you can see that we've been pulling back nowhere near as high to new all-time highs as the IWY or the VONG. So these are the two I would look to trade, where to buy the small caps. So if and when we do pull the trigger on these trades, it'll be one of the two. Now, going back to the futures. Totally different. How's PGC? Let's take a look at it. It looks good. This is a weekly view. Let's pull back here for a second. Monthly view. All right, so the monthly view is not looking as good as the weekly view, but it's improving. All right, so here are your support levels. We're holding them. If you wanted to buy it, that's fine. Just put a stop loss right below the lower bands of support, which is at current, let's call it 29, sorry, wrong, 26.80. And that's a pretty far way away here on a percentage basis. So I wouldn't even buy it right now. I would do this. I would wait for a breakout above this resistance level here. The weekly chart looks okay, but again, we have resistance right here. So what I would do simply is just create an alert, watch for the breakout. And I'm not going to mess with the expiration because I'm not going to trade this stock. So I would just set it and forget it. There's that chart if you want it. Daily chart. Yeah, I would just simply wait for the breakout here. I would buy it as a momentum trade, a continuation move higher. If you wanted to buy it today, you're not going to pay attention to what I have to say. Just simply use a stop loss right below this support level here, 28.76. We close down below it. You probably want to get out of it. Okay, we're going to wrap things up here. I want to take a look at the euro. Now, before that, I didn't finish off with the stock market indexes. S&P 500 this morning, folks. We're breaking out. So much for the massive correction from yesterday. This is what I mentioned last night. The stock market's moving higher. The powers that be are in charge here until they're not. And we'll know when they're not. When the credit markets freeze up, then they're not. But until then, the S&P 500 is on autopilot, as Jay Powell likes to say. So we are breaking out this morning above an upper band of resistance. I would be a buyer. I may be a buyer today of the leveraged ETF putting us along of the S&P 500 and one of the ETFs putting us along of the Russell 2000. And I have another stock that we're watching in the healthcare sector. Let me bring that up. It's not a stock, I'm sorry. It's a leveraged ETF. My apologies. And that is Cure. This is in healthcare. It's the Direction Healthcare Bull ETF. And we're looking for a breakout here. And for those that are not familiar with what I do, you're welcome, totally indifferent. Does that chart open up for you? I just started doing that last night. I don't know if it works or if it's of any value to you. All right, so we're watching Cure. The week looks so far very, very good. And we're looking for a breakout above this upper band of resistance. RSI moving higher. Stokes moving higher. I like the healthcare sector. Good to hear. Okay, great. Thank you for that. Monthly basis, you can see that we're above the upper band of resistance. So this is another one we'll be looking to get long of fairly soon. So we're probably going to be in there buying today, Monday, and getting more further long of this market. The only caveat I'm going to throw out there, for those that are not hedged and looking to go buying this market without a safety net, be careful. You know, you have a hedge. We're hedged using the gold miners, which generally trades inversely of the stock market. It's a safe haven play. They moved higher yesterday when the stock market moved lower. That's why we're long of them. Ultimately, we believe that after the 2020 elections, this market's going to crater. And then we'll look to get short, and we expect our gold mining trade to go to work for us even more so than it's done in 2019. And we're up about, 45, 50% so far this year on that trade. So it's pretty big. So this is what I'm looking at, and these are my thoughts on the market. And with that, I will be putting together best stock charts for the coming week. That'll be coming out on Sunday. We'll then be doing Sunday night stock market futures live. And I'll be doing a private members group session on Sunday evening. And that's when members come to me and they discuss symbols that they're interested in, or if they have questions about what I'm looking at, or they need some help with regard to trade setups, candlestick charting, whatever. It's members' time. It's not my time. So I dedicate that time to them, and I answer questions and try to solve problems. And so please take advantage of the 14-day free trial offer. And with that, everybody have a great weekend, and I will talk to you very soon. Be well.